Those are the headlines we're tracking for you this evening. Bengaluru-based Edtech startup Newton School recently raised $25 million in its Series B funding round. The round was led by Steadview Capital, the global investment firm whose portfolio includes Indian unicorns like Nykaa, Polygon, Zomato and Freshworks. Existing investors, Nexus Venture Partners and RTP Global also participated in the round. To talk to us about the road ahead at Newton School, joining me now is its co-founder Nishant Chandra. Nishant, welcome to Startup Street. Newton School enables people from Tier 2 and Tier 3 cities to get technology jobs. How does this fundraise further help you scale and expand, and how do you plan to utilize the funds?
Thanks, Shruti, for inviting me on Startup Street. So, this fundraise, over the last year or so, we have placed more than 1,500 students. And this fundraise helps us build technology and products to actually personalize and gamify a learning path. It will also help us hire exceptional people to take this pan-India and also help us in our international expansion going forward.
Okay. Nishant, tell me, what is a typical profile of your user and how do you make them job ready? If you could take me through the courses and the partnerships that you provide.
Yeah, so Shruti, as you've seen, what we have in India is a plethora of colleges, thousands and thousands of colleges who don't do their job well. So what we do at Newton School is cater to people who are starting from scratch and want to get into technology jobs. They might be fresh graduates or experienced professionals. And in terms of the courses, we have rigorous 6-month program for freshers, and we also have 1-year programs for experienced professionals where they can learn with lesser workload and also get a degree at the end of their program.
Okay. Nishant, Newton School claims, to have placed over 1,500 aspirants in over 600 companies till date. And you also claim that during the pandemic, more students graduated from Newton School and got good jobs than one of the top IITs. What is the reason behind this, and what is the average salary that your students have been able to get?
Yes, Shruti. So we are a very outcome-oriented program where we have reverse engineered what the industry actually requires and put it into our program. So majority of the syllabus in current colleges doesn't meet the industry requirement. So we make sure that we are teaching only very specific skills that are needed in the industry. But in addition, we also teach soft skills and processes that are used in corporate. In addition to that, we are very, very practice and project focused, where people are building clones of Flipkart, Instagram, and things like that to actually become placement ready. In terms of the salaries, our average salary would be around 7 lakhs per annum and goes up to 25 lakhs per annum. And more than that, what we've seen is people who graduated from Newton School around a year and a half ago are now having salaries of close to 35 lakhs to 55 lakhs per annum. This is such a phenomenal price that it rivals any career track that even IITs have. So in terms of both volumes as well as top outcomes, we rival the best institutions in the country.
All right. Okay. Let's talk about your offerings. You recently launched a master's degree program for people from non-tech backgrounds. What is the kind of demand and traction you've seen so far, and what is the goal there?
Yes. So we had a very intensive 6-month program. And what we realized was there was a lot of working professionals who were not able to devote that much time. So we actually introduced a new 1-year master's program where people can learn over the weekend and at the end of the day also get a degree. We have seen phenomenal growth for that program as well, where we've grown close to 10 times over the last 6 months or so. So, and we have seen people who are working in BPO sectors shifting into technology jobs, and also folks like doctors who want to learn coding to apply it in their field. So we are very, very excited about the reception of the program.
Okay. All right. Nishant, let's talk numbers now. How many students currently are you teaching in a month, and what is the kind of revenue you're clocking right now?
So currently we are teaching thousands of students in parallel, and our systems can actually handle loads of tens of thousands of students. In terms of revenue, we're close to 100 crores in annualized run rate. So yeah, we're going pretty fast.
Okay. So like you mentioned, you aim to reach 100 million in annualized run rate, I believe, by 2023. What makes you bullish, and where do you see the next leg of growth coming from?
So since the inception of Newton School, we realized that the market of people who are looking for jobs is phenomenally huge. I mean, there are hundreds of millions of 18 to 24-year-olds who are looking for jobs. So we are in a huge market where even the demand is not a constraint, where almost all of the companies are constrained by the number of developers that they have. So we only have to grow around 7 to 8 times to actually reach 100 million in annualized run rate.
Okay.
And we are pretty confident to do that. In addition to that, things like expansion into international markets would also, add to the run rate.
Okay, so Newton School Series B round follows just a year after you raised $5 million in your Series A round. Are you looking to raise more funds in the future? Like you mentioned, you also plan to go global. What markets would that be?
So fundraise just comes from building valuable products for the users and getting traction and user activity from that. So we have seen growth in terms of user metrics very sharply over the last year and anticipate that going forward in the years as well. So in terms of fundraising, in fact, we are also unit level profitable, where we are generating a lot of revenues per month as well. So we would look to fundraise for strategic purposes like acquisition and acceleration of growth as well as international expansion. But net, we are very cash flow strong.
Okay. Nishant, we wish you the very best for both your inorganic and organic growth. Many thanks for joining us on Startup Street today.
Thank you. Thanks for having me.
Moving on. Trade Finance Network, Vayana Network, recently raised a further $15 million as a part of its Series C funding from International Finance Corporation and PayU, the payments and fintech business of Process. The venture had earlier raised $37 million as part of its Series C round and plans to use the funds to build products focused on helping MSMEs better manage their working capital and become credit ready. To tell us how, joining me now is Ram Iyer, founder and CEO of Vayana Network. Ram, many thanks for joining us on Startup Street. You've raised a total of $52 million in your Series C funding. Like I just mentioned, you plan to build products focused on helping MSMEs better manage their working capital and become credit ready. If you could elaborate on these offerings.
Yeah, so I think, India, like most other emerging countries or even developed countries, is a very large base of very small companies. These are companies less than $1 million of turnover. And a lot of them are less than $10 million of turnover. If you look at these companies and if you want to extend credit to them, then a lot of the current models of credit do not work. More importantly, these guys do not know exactly how to take the money. What does it mean to take the obligation of credit? And I think that's really what we are looking at when we say that we want to create products to make them credit ready. What does that really mean? It means how do we get them to focus on running their business more efficiently? How do we get them to manage their working capital better, collect faster, pay more efficiently? And then figure out what is the cheapest form of credit that they can access. I think that really is what we really mean by going to small businesses and making them credit ready. And I think that's the range of products that we would like to kind of build right now.
All right.
With this fundraise.
Ram, you've got both IFC and PayU on the cap table. What does their backing mean to you?
So I think both are exceptionally important in their own ways. Just to let you know, we had the old round of Series C led by Marshall Ways, which is a rich fund, and then we had March Capital, Series C, Chirati and Jungle. Chirati and Jungle, of course, are earlier investors who have participated in this round. Now, the addition of IFC and PayU, basically what it means is that from an IFC perspective, I think it really means a lot more of global recognition, a lot of global credibility, and ability to kind of work with financial institutions in India who understand the power of the IFC name, and as well as obviously work with IFC in their own impact side of the story, where they are heavily involved with supply chain finance and trade credit programs all over the world. I think with PayU, obviously, we knew the PayU people very well. We find their entire work in the merchant side very, very interesting. And I think there's a lot of, stuff that we could do together.
Okay.
And when we look at them, we really want to borrow their experience of they've gone to the merchant base, the small retailer base, and kind of sold their products. And at the same time, work with them on the credit side. So I think it's a pretty symbiotic relationship at the PayU level.
All right.
The IFC level is all about, getting the necessary, help and support to kind of go deeper into the real small businesses of this country.
Okay. Now, you plan to do more than $10 billion of trade financing in India alone this financial year. How do you plan to achieve this target? Any new tools in the pipeline? Basically, how do you plan to further help small businesses manage their working capital efficiently and source trade finance at affordable rates?
Right. So two parts to the question, Shruti. One, we clocked about 5,300 crores of financing in March alone. That kind of puts us in a run rate for doing about 8 billion this year. I think the additional 2 billion will pretty much be organic. We should hopefully by June, July, get to about $1 billion of financing per month on our platform. I think what's really interesting for us are two things. One is that we have one of the license holders for the International Trade Finance Exchange, which is set up in GIFT City. We really are very, very keen on that business because we think that a lot of small businesses, small exporters and importers out of India really need to kind of get foreign currency credit from an old range of institutions rather than what they get today. And I think ITFS will help unlock a huge amount of export-import credit in India, and I think it's a great initiative by the government. The second area that I think what we really want to work on is work much more closely with some of the largest banks to extend credit to the smallest of the businesses by offering them all kinds of tools and supports that helps them analyze these businesses in a lot more deeper sense. And figure out how to kind of get that low cost of credit down to them. In India, the net margins at the smallest business level is very, very small. And if you really want to give them credit, the credit will have to be less than 100 basis points a month or about 12% annualized. That can only happen when we can attract the largest of the financial institutions who have the lowest cost of funds to come in and lend to these businesses. And the only way we can get them to do that is by making sure that we can help them measure risk, get them to kind of get comfortable with whom they're lending. And I think trade credit offers probably the best risk-adjusted business in the world. And that's what we really want to kind of work with lenders in this year to kind of reduce the cost of credit to the small business.